the Sydney Tokyo overlap. The daylight settings have been changed since yesterday. I would like to keep you informed, but today we are doing it at around 8 p.m. Eastern now, and possibly we'll be doing it at original times, that is 7 p.m. Eastern. We'll be adjusting again and be doing it at 7 p.m. Eastern as normal. So kindly excuse me for the delay due to the deadline time saving, and we'll be back on track according to the Eastern Standard Times, probably from the next session onwards, or probably tomorrow onwards. All right, so let's get started off with the first session of the week. Possibly we are looking for a corrective decline over this week, uh, or we still have some upside to go. Euro USD has already touched 890 over the last week, where we were expecting prices to produce some kind of a pullback after hitting 750. So we'll have to just look into whether this week we are going to see some corrective decline or not, or is it going to go further. As far as the Fibonacci extensions are concerned, about the recent wave, we have already got the targets met. There you are. The targets were already hit around the 760, 770 mark, and it should be some kind of a corrective decline before we can initiate longs again. I think it's around 680 or so. And if on the other side, if bulls are in a hurry or in a rush, in absolute rush to complete the wave structure, remember the larger degree wave structure, 5 up followed by 3 down. So if that wave, the third wave or the C wave, whichever it is, normally it's the fastest and the quickest in terms of time, and also in terms of magnitude, it's one of the largest. So if that's the case, then it would be difficult for for any kind of pullback to be expected even this week. Let's see how the price action shapes up. But normally it would bring it, it should bring prices lower towards 600 mark before producing another high around the 1100 mark. We still have about 300 points or 400 points to be covered. All right. Now, trading point of view, there is absolutely nothing that changes our outlook for euro and pound and the dollar indexes. The only thing that we request is if you're holding only one position, then don't try to please book partial profits. It will be difficult to get on the long side again. But if you have multiple positions, then it's okay to take some partial profits off the desk and wait for a pullback towards the 650, 660 zone before entering on the long side again. And as far as the price action when the stop loss is concerned, potential stop loss or suggested stop loss now goes around. That's the low registered on 20th Feb. It is absolutely safe and technically correct to remain below that. That is around 350. So from 200, it is okay to move the stop loss to 350 and remain there. The potential upside targets are unchanged towards 1.11, that is 1100 and 1200 possibly. But please remember, we are not going to stop there. Euro is heading. It needs to break above 1.1275 right there. All right. So that's the story in the euro. Before we Okay, let's follow the dollar index first. All right, that's the daily outlook, daily chart, and it looks like a perfect classic book example of an Elliott basic structure, which is absolutely beautiful to watch. That five-wave decline followed by a corrective wave A, B, C. All right, and what we are now looking towards the right hand side is we've got wave 1, wave 2, and then again we've got wave 1 and wave 2. So possibly the third wave is underway. if if yeah, it doesn't look like the third wave. I think it has just taken a 50% retracement of uh, the lower degree wave 1. All right, it looks like the third wave. But tell you what, the third wave, it is enough to just mention third wave, and normally it is the extended one, and it is the most quickest one of all of them. You can see that that was third wave. That particular drop, I think it went all the way towards I mean how many points? That was the maximum drop. I'm talking about the distance from that point to this point. It was third wave, sir. So it's going to be as powerful as possibly what it was earlier. Please remain on the short side and continue to hold your short positions. By any chance, if you're holding just one short position, then there is no recommendation to take partial profits and again try and sell. But if you do have multiple positions, as suggested last week, partial profits can be booked. There should be some kind of a pullback coming in. Looking at the RSI, which is absolutely stretched, supports being taken out left and right. So some kind of a shallow pullback. I'm not saying a huge or meaningful pullback is underway. I tell you what, I mean, going by the definition of third wave, I don't think that's still complete. The third wave completes around 1.101. That's exactly where where both Fibonacci extensions are also meeting. The only thing is that if we are whether we are going to get a chance to re-enter, that's the only thing we need to see. But it's better to keep your limit orders intact around 105, just in case a pullback is materialized soon enough. All right, so that's the story in the dollar index. Okay, as far as the stock was concerned, the 28th February high, which was registered around 107.60, and just place your stop loss. You can just place your stop loss above that. Possibly 108, it won't be a bad idea at all. All right, it looks like a neat little wave 1, wave 2, again wave 1 and wave 2, and the third wave lower. All right. All right, it's GBP USD now. Once again, I still feel this is an expanded wave, four in the making, and that the bulls are still not in a mood to produce any kind of decent correction or even a shallow correction. I mean, it's still out of woods. It's still not out of woods. I mean, uh, upside targets might be. It's already 2,900, and it won't be surprising to see prices still pushing towards the 30 and the 3,200 mark up there. So the only suggestion that we would like to make in pound is that kindly hold on to your short long positions, and only if there is a corrective decline in the offering, maybe this week or next week, should you try and add positions rather than exit right now and then wait for the corrective decline, because with major resistances being taken out around 1.28, the next one is just around the corner, 1.3. The expected pullback is extremely shallow. I would say absolutely shallow the pullbacks are. So it's not a bad idea to keep holding to your longs. In fact, we're just waiting for a limit order to trigger around the 2670. If we get a if we get a pullback around that price, it would be a good entry on the long side with a potential target of around 3 and 1.30 and 1.32. All right, sir. So okay, and as far as the stop loss is concerned, it goes right below that 28th, or maybe below the 28th February lows, or ideally it would go around 1 point, yeah, 2300 something. It's good to place around 1.23, or technically we are not incorrect if we place around 1.25 as well. All right, but the upside is absolutely intact, and I'll give you a potential idea of where pound is heading. That was an expanded flat or a running flat or a combination. Complex structure though, that was which was seen in pound. It's going above that price, 1.3400. Ideally, it's already moved quite a bit long. It's wave one, wave two, and the uh, and the third wave is going on. It's underway right now. We've got to wait for a corrective pullback to enter the long side again, but otherwise the existing longs can be held on. All right, that is that's pound. One way to look at gold. Okay, if we are wanting to touch base on the daily outlook once again, we are uh, we are in a five-wave rally at a minor degree. That's the first point we understood. And within the five-wave rally of a minor degree, it is minor wave one complete, two, three, and potentially minor wave four is also complete. So ideally, we are within the minor fifth wave since 2540, and if we do the subdivisions after that, it is minute wave 1, 2, 3 also complete, and we are now within the fourth minute wave 4 of the minor wave 5. So technically speaking, we have only one more rally left. Now the question is, ideally minute, if it is minute wave 4 still unfolding, then the structure for minute wave 4 is an ABC projected here, in which we have within which we've got wave A in place, wave B probably in place on Friday with that spike around 31, 32, and wave C, if it's correctly done, then wave C should be underway, should be now underway, and ideally wave C would unfold as a 5-wave impulse or a diagonal structure, both 5 ways. Right? It remains to be seen whether it's going to be an impulse or a diagonal. But I think the way price action closed on Friday, it's trying to produce an impulse. I think we've got the first wave right from 31 levels to 2903. All right, or it went up to 2902 directly. Let's see how the price action is now shaping up. If it is a second wave, the corrective second wave, then the third wave should be underway soon. I think we should zoom out a bit. This one, this one is the correct way to see. The drop from, I think it went up to 34, I suppose. It went up to 30 and then almost 30 points lower. So it remains to be seen how the story unfolds. But trading point of view, we have held on to the short positions over the last week. We can continue holding short positions with the stop loss around potential stop loss around 2960 and potential take profit or potential targets are now pointing towards two. Ideally, it would be 2815, sir. That's 2815, which is also the 38.2% retracement of the third wave, and the parallel channel. Even the parallel channel would be okay. It is already surpassing. Now the angle is higher. So somewhere, I mean, it should not be taking much time because the convergence point has already gone 5th of March. I don't see any other convergence around the 2800 zone now. It needs to drop quickly. Possibly this week, it would be good actually between the 10th and 14th of March to settle around the 2800, 2810, and then continue a turn higher again for the last wave. Ideally, the minute wave 5 within minor wave 5. All right. Okay, so that is the story in gold, and now let's turn our focus to Bitcoin. Now, yesterday, while we were doing that weekend session in Bitcoin, we were trading somewhere around the 85, 86,000 mark, and that was a potential breakout of the triangle structure which we were expecting, and we held on. Not held on. We actually initiated shorts right after the session, and we've also been able to book profits before just beginning to start the current session. So 85,000 shorts and almost 80,500 we have covered it. But tell you what, that's just a short-term take profit level. potential still remains around the 71,000 mark, where where bears would like to drag and then settle around the 71, 72, and thereafter we will. I mean, that would be a place to go aggressively long. I'm using the word aggressively long. It doesn't mean that it's going to rally towards a new high thereafter. I mean, it would be completing five wave decline thereafter. I believe it's wave one, wave two, and then wave three extension. All right, or even wave three extension is not yet complete. The third wave is still underway with wave one, wave two, uh, wave three, wave 4 going on, and that could be wave 5, so that would be wave 3 itself. All right, uh, we will take a we'll take a review again around the 71,000, 72,000 mark, and then take a call whether we want to go long in Bitcoin or not. Right now we took around 4,500 points short-term profits, but the drop may not be still over. Somewhere around the 71,000, 72,000 would be where the prices would want to settle. All right. Okay, so this is another story. Bitcoin on the short side, I believe Solana would be following suit what Bitcoin is doing right now. That's exactly what we were talking about in the last session as well. Maybe one more low is left in Solana. I mean, it's kind of wanting to break below that 112 mark. Tell you what, a break below 112 is going to be a clear indication of a five-wave decline, right in Solana, and then it's going to be an excellent case to be sold on rallies thereafter, I suppose. With that was wave four, right? That was wave four of a minor degree, and and thereafter fifth wave is looking complete. It's almost done. There you are. Or is it the third wave complete and maybe wave four? Because I think we've got wave one, wave two, all the way wave three, four, and five, and then now we've got wave one, wave two, wave three. That could be wave four. It remains to be seen. It's going to be interesting how prices behave around 121. Let me see. It's okay. It's also diverging, so it might be just preparing to produce that one more leg higher, at least one more leg higher. So it's going to be interesting while we review the price action. Just around one more low in Solana. I can see three waves up. First thing, you see three waves up and then three waves down. That could be an expanded flat structure as well. All right, so I'm not ruling that out as well. It's quite possible that another rally could be in the making, but that's going to be an aggressive one, brothers. So we've got to be careful if we want to go that aggressive long, and that's why I'm not initiating. See, anything on the short side would have made money. Even yesterday, around the weekend session, had we initiated shorts, we would have made money. I mean, selling is easier to be to be yielding profits right now than buying. All right. So we've got to be a bit careful when we want to go long, whether we want to go long or not. And finally, on the indices front, I think it would be silent now, but let's have a quick look at futures. Yes, it is a bit silent now, as discussed earlier. but it's going to be interesting how markets open. Futures are silent around 42,510 right now. I think bears would be targeting that low, 41,700 possibly, before producing that meaningful corrective rally again. All right. So those are the stories as we move into a new week, and we'll be now back around London times. Until that, again, once again, thank you for tuning in, and until the next one, as always, please do take care and God bless. Goodbye.